Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 15th COT report in 2014. And as usual, we're going to start off with the changes in commercials position. So here we go. Gasoline on top of our list with a 25% change in commercials positions and 32% change in large speculators. You can see the changes over here. They're definitely larger than average changes. We've seen larger changes in the past, but they're definitely considerable large changes. Let's have a look at the market and see what happened when we had these bearish change signals. The last one was over here, and you may see, even though we have this rollover in the chart, that it was an effective COT change signal. Then we had bearish COT change signals right over here at the top, and then some bullish COT change signal over here at the bottom. So we can state from those examples that change signals are effective in gasoline. We have a bullish change signal over here, may have came a bit later, at least when we saw the report. The signal may have been a bit late. Then we got a bullish change signal over here, and the largest change that I was just talking about happened back in 2013, just before we had this rally. So we can state that change signals in the gasoline market are effective signals, and the one we have right now is bearish. Let's move on and have a look at the Japanese yen. 23% change in commercials positions over there, 22 in the large speculators and 21 in small speculators. So basically the same change sizes everywhere. They're larger than average. We do see greater changes in the past. And similarly to the gasoline market, we can state that more or less these are effective change signals in the Japanese yen. Let's open a 5 years chart and see how extreme the Japanese yen market is at the moment. Of course, we've been talking about this market a few reports ago, maybe even last week, that we had this huge, not all time, but close to it, bullish change, COT Extreme signal that may have marked the end of this decline. Of course, if the extreme widens even more, we can easily see the continuation of this decline in prices. It's hard to tell, but of course the chances at the moment seem to be for the continuation of this small rally that has started. Let's move on and Nasdaq, another market for change signals. Before we move on to large speculators, COT Extreme. Nasdaq, we have a 19% change, and as you can see on the chart, nothing really unusual in this market. So I would say last week's change signal was even greater, and as you can see, it may have been a good signal. As you can see, last week prices have I believe rallied, yes. But let's have just a look at the greater picture. You can see that we had this COT Extreme sell signal. Of course, it's been there for quite some time in 2013. That may have put a top into prices. Of course, we should be very cautious. If you look at this 5 years chart, for quite some time we had these little bounces in the rally, and then we've always came back to the rally, which of course again may be the case. We'll see. Now let's move to large speculators, COT Extreme. Here we go. British pound, rough rice, and feeder cattle. Let's start with British pound, where we have a 164 report extreme in large speculators, but we have an even greater extreme in commercials, 350 report extreme. Let's open a 5 years chart right away and see this extreme. Here we go. Unquestionable bearish COT extreme signal that if you look at the historical charts, pretty much all the time these were effective COT extreme signals. And we are expecting it to be effective again. Of course, it's hard to tell exactly when we will reach the top, but the extreme is there. Stress levels are high, and eventually we should see some kind of a reaction in prices. Rough price, the next market, 133 report extreme over there, opening a 5 years chart. Here we go. You can see that if we would be looking at a 2.5, 3 years chart, we would be talking about a bearish extreme. But the 5 years chart tells us a bit different story. You can see that we'd be at an unquestionable extreme if commercials would be below 13,000 contracts net short level. They're at roughly 2,300-400 contracts net short, so more or less 10,000 contracts away from that level. Of course, we can see that prices have declined last week, and this could continue for a few more weeks, but nothing major that we can talk about right now. All in all, the wider picture to me is still more bullish than bearish, but this of course may change. Feeder cattle, the next market and last market for the week, 108 report extreme over there. Let's open the 5 years chart right away. Here we go. You can see how huge this extreme has grown, and of course we are expecting it to influence prices sooner or later. Of course, we've been waiting for this for a few weeks now. Still, prices have not reacted. But of course, if you look carefully, commercials are not at their huge extreme levels yet. Even on this 5 years chart, we can see that they should go below the zero line to, let's say, 4,000 contracts net short level to really reach an extreme that could be strong enough to push prices down. That's going to be all for this week. If you would like to have a look at other COT charts, you can do so at our COT charts page. If you would like to have a more in-depth and detailed COT analysis, then of course that's the page we're looking at right now. Just come to cotbase.com, visit us, and check these features out as well. I hope you enjoyed the review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.